Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. So tonight's live Forex market review. If you're on our YouTube live stream, I can't see the chat, so you're more than welcome to watch, or you can join as in the webinar. Just use the link that I provided, and then you can chat to us. All right, so some housekeeping. If you can read through the risk disclaimer. Got the chat box open, question and answer box open, so just use either to talk to me. All right, so just read through the risk disclaimer. I'm going to be going through some analysis. I might be talking about setups that I've taken, might be taking, but ultimately I'm not giving you trading advice. It's just technical analysis. You're all responsible for your own trading decisions. Let's move along. If you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. And I'm a full-time trader. I've been trading the Forex market now for more than 15 years, mentoring clients in the Forex market for more than 10 years. And if you want to contact me about the webinars and what I do at ACY, then just email me, duncan.cooper@acy.com. You can connect with me in the week at our website, on the acy.com website, market news tab, at our YouTube channel, ACY Securities Australia. And if you like, you can connect with me on Twitter or LinkedIn. As well, through the week, you can connect with me in our Telegram channel. Just contact Nathan Bray, providing analysis through the week and on the weekend. Do a weekend video talking about what I think might be happening over the week, coming week across 6 pairs. And then I provide some analysis through the week based around the webinar education that I provide. If you want to get access to that or access to my chart layouts and templates that you'll see in a moment, then just contact Nathan Bray. I'll put his details in the chat now. So any questions, just contact Nathan. If you've got any account questions, just contact Nathan. His details are in the chat just there. As well, on Monday, if you're an ACY Securities clients, we've got the Inner Circle webinar at 8 p.m. Sydney time. To get access, you need to speak to Nathan. So I'll put his details in the chat there. Just contact him. He will fix you up. All right, that's all my housekeeping. So let's get into what's happening. So let's just have a look at, first of all, these items coming out for the day. We are obviously early in the day, we had the FOMC statements and the market did go berserk. I set my alarm for 4 o'clock in the morning to see what was going on. And we saw the US dollar sell off and then we saw it unsell off. So 75 base point rise may still continue at that rate. We'll just have to wait and see. Then coming up at 10 p.m. tonight, we got for the UK, we got their interest rate decision, expecting 75 base point rise. I have seen some headlines to say that maybe they won't quite raise at 75 base points. So that would be negative. And if you look at the pound dollar at the moment, it's just flying down the chart. So with the FOMC statement that has come out and high inflation in the UK, so on and so forth. Even if they raise by 0.75%, the pound dollar at the moment is flying down the chart. So they're obviously anticipating at best 0.75, or maybe the market's expecting slightly worse. Then at midnight, we have ISM Services PMI data coming out, and the job figures are coming out tomorrow evening. So still some risk events for the week. Obviously, the UK interest rate decision, and then the press conference at 10:30, and the US job figures primarily there on Friday evening. Okay, so be aware of those things coming out. All right, I'm going to go use my price action charts. I've pretty much got them set up to what they were on Tuesday. So the levels I was discussing on Tuesday, I can revisit and see where we've moved from and to. All right, I just want to firstly, let's just have a look at the dollar index and the monthly chart. So I have to squash it in to get in this major range. And, you know, we're very positive for the month now. We were negative for the month, but we're now positive. As I said to you before, we've been challenging at 111.31. We were below it during the week, but now we're back above it. And, you know, potentially we're just heading towards this top up here at 121 over time. We haven't had a month down. We may have just had a month down here, which was fractional. But really, you know, there's been not a lot of monthly pullback. At times we've had a negative month here. We couldn't have a month down. I think this was a fraction month down, but not much of a pullback. So last month was negative. And if you hadn't realized, last month the FOMC didn't have an interest rate decision. So maybe the market was just kind of, you know, waiting. So we were a bit negative last month because we didn't have an interest rate decision to affect the market. But of course we have one this month. And we're very positive. So maybe we're just going to move above the high of the previous month, onward and upward. And the S&P 500 had a sell-off. This is the monthly range. I've got the fib across. We just fractionally had a month up, just false break the high of last month. I spoke about that on a number of currency pairs. Maybe we might just false break the highs of a number of currency pairs previous month before declining. So the S&P 500 has done that. It's just taken out the high of last month, and then obviously after yesterday's news, it sold off heavily. Not quite changed the day chart trend to down, I don't think yet, but it's looking like maybe it's going to. So that's turning generally negative. Dollar index is turning positive. So that theoretically in general terms for currency pairs to the US dollar is going to be negative. So what we might just talk about first of all is the dollar yen. Not a pair that I'm trading, but I did highlight an area on Tuesday to watch, and we did visit that area. Let me just drop it down to the 4-hour chart. This area here. Last Tuesday, just gone, I said of last month's range, this is my 4-hour chart, we'd already pulled back pretty much to 79% level here last month. So, and then I was thinking maybe we were going to form a little bit of an inverse head and shoulder pattern here, left shoulder head. Could this come down to the 79% level or into this area of daily support, weekly support? I think this is weekly support at 145.89, daily support lower down, 144.99. So of course we have, you can see there, that was the area to watch. At the moment, you know, I'd be very cautious. Once we get up to 150, the Bank of Japan keeps coming in and intervening. So to me, it's a difficult pair to trade because of that intervention mode. I will just be watching for 150. Getting back up to 150 if we can. Highly probable that we will, you know, potentially get some intervention. So in the short term though, with this fib drawn here, pulling back to 79, we may well be moving up to, you know, the 127 extension. That takes you up to 149.85. So then we're back into the 150 area. All right. So, you know, if you want to trade that pair, sure. Today, we've already seen a pullback intraday and found support at the central pivot point. So the best area to look to be trading this to the long side today was down here. Now we're getting much more closer towards the high of the day. So you've kind of missed the boat to trade that at the moment, but keep watching the central pivot point from day to day. These pairs that are strong, if it's an uptrend, they may only pull back to central pivot points. In a strong downtrend, they may only pull back up to the central pivot point. I've been watching a couple of pairs posted in Telegram today, looking to trade down from some central pivot points today, but price has never got there. So trends are very strong at the moment following the news event of yesterday or very early this morning. So watch central pivot point for tomorrow now. Does that offer support for the next move up? But do watch 150. Be very cautious around 150 that, you know, the selling pressure is going to start to come back in from the Bank of Japan. All right. So we're definitely seeing that moving back up. All right, I'm just going to go from left to right. I'm going to start with the Aussie yen. Now, I've been saying that I'm looking at this as a major range of a move down. We have right to the 62% level, coincides with weekly resistance. On the day chart look here, we put in 3 tops and we decided to break back below this daily support, 94.68 yesterday. So for me, I think this has moved down. This is corrective and we're putting another leg in down here. So maybe we can get down to the 127 extension over time. But, you know, at least maybe can we come down to test here weekly support, 91.41, 90.51. So it's a question of trying to get in on a move. Now, I was looking earlier in the day at this area up here. Could we come up and retest this level, 94.07, 9400 to 94.07, but it did touch it on that candle, but that was really at the end of New York. And I was hoping for a rally back up to the area. Now, we could still rally back up to the area over the next 24 hours, but of course, at the moment, as I move down to 50-minute chart, I was looking at this area for a rally, but we haven't been able to get there. We could get there today, but of course, you know, the high of the day at the moment is really here through Asia. Couldn't get up there. And that's what we tend to see. If it's very weak, we can't get back to the central pivot point. Or if it is weak, that's the best we can do. That's why I was looking at 4-hour resistance and central pivot point, but we haven't got there yet. Shahzad, if I'm pronouncing your name right, I'm just reading what you're saying. So you're asking me, how am I obtaining my support and resistance levels in MetaTrader? Which indicator should we search for in app? It's just called the support and resistance indicator. If you can't find it, if you contact Nathan, I'll put his details in the chat. He will be able to organize for you to get it from him, okay? So I think it's called the support and resistance indicator, but I have a whole setup that you can have downloaded and just set the whole thing up real quick. So if you'd like to do that, just contact Nathan at the office. All right. Slavy telling me Aussie's very weak today. Well, yeah, I mean, it might get up there. You know, what I don't like to do, and, you know, providing you all with analysis through the week is one thing, trading is another thing. You know, sometimes the analysis works out really good and offers you the levels that you can trade from. But analysis is one thing, trading is another thing. But I don't like to trade, you know, so low down at the low of the day. I don't like to chase price and hope that if I sell near the low of the day, it's going to continue down. I like to sell rise. So I like to come up with logical levels where price can rally to. Sometimes price will rally to and offer you that very discount level to trade from. Other times, you know, sometimes price won't get there. But watch this area tomorrow, 9400 to 9407. We may well get there today or tomorrow. Or not. If it doesn't, well, you know, you'll have to try to look to structure something else. But at the moment, just looking to try to sell a rally at a prominent level of resistance, okay? Aussie dollar. Now, I did go through this pair yesterday and the structure that we've been fading at last month and into this month, we've failed up there. All right, so to me, this is the high of last month, low of last month, okay? And I might be telling a lie here. Let me just double check that's correct. That's the high of last month, low of last month. And we've had a 79% retracement. I look for this all the time. Next month, trading up to the 79% retracement level to hold, put in the high of the next month, will move down. So it's clearly failed there. It actually retested 79% level this morning, if you were up watching. All right, so that was where you should have been looking to be a trader up there. At the moment now, it is moving down. And I did have another line on my charts from this low here. 62.47 is monthly support. All right, so we're moving down towards 62.84, 62.47. 84 is the weekly support level. That is monthly support at 62.47. So we traded down through those levels last month, but we obviously bounced back up. Are we seeing, in general terms, it's a continuation pattern within the range of last month to put in the new candle? That range down, are we seeing it copied down now towards the 127 extension level? All right. Are we seeing that kind of affair? We could, if things continue to be so aggressively negative at the moment, we could see, trading down at 60 this month, early next month. Okay, so that's what I'm looking at in terms of general direction and philosophy. In terms of getting in, the best thing to do is to sell a rally. So this is daily support that was. Daily support that was here. This area, 63, 63, 63, 47, this area. I'll be watching this area to be resistance now on a pullback to move down. All right, I'm not going to sell it at the bottom of the move. Now, of course, it could just keep going down day by day by day, but I might see an intraday option of being able to trade down maybe from the central pivot point. But I'm going to be watching that area of resistance up there. Can we rally back up? Hold there to move down. As you can see, we haven't been able to get to the central pivot point today. This is rather weak. All right, we may well test 63 today. Over the coming days, maybe next week. Just see what Cameron's telling me in the chat. So you're asking me, the 4-hour candle that touched the 79% today, would you enter on a 15-minute trigger there? If I was here watching at the time and I saw this come up to there and started to see it deal below the 79, I would have probably just clicked in and used a 100 pip stop. That's how I would have approached that. So, this up here, that 79% level as well, there was also that movement down to there. There was that 79% level there too. So there was a couple of 79% levels you could have been looking to trade at. The bigger one of the range for the monthly range is the lower one. The way I would have looked at that, if I was wanting to trade at the time, I would have had that 79% level drawn in, which we just touched, just shy of the 6,500 level. So it was at 64.88. Once price started to, and this came down rather quickly because I was watching the euro dollar and pound dollar. You would have needed to be quick. So, once this started to not want to be above 64, 66, that was the time just to click in. Put your stop above the high or a 100 pip stop. Okay. Looking for a trigger on a 15-minute chart, there's no trend line break there or swing point break you could have traded. You just have to make a decision. Do you want to be in with the idea that we're fading up there? Have a wide stop. And, you roll the dice to see whether or not, yes, this is reversing down from that significant 79% level. All right, so if you did trade it, it would have worked. Simply trading the 79% level with a 100 pip stop, okay? I know I keep saying that on a lot of trade setups, but the market's quite volatile. But if you get the levels right, you can't trade this right here with a 20 pip stop because it's too volatile. So you have to then go to a way that you can trade volatility, and trading with a 100 pip stop from 64.66, you're up 166 pips already if you were trading it there. Potentially you could be up 200 pips by the end of the day or by the end of the week. That's not bad going when you're using a 100 pip stop. If you're risking 2% in your account, you're up 4% over a couple of days. All right. So that's how I will be doing things when, things are volatile. Now, I wasn't trading this at 4 o'clock this morning, but, that would have been the process to look for 79% retracement once more. And of course, now we're down here, and it's difficult to get in now because this is why I keep hammering home, you know, look at the range for the month. What's price doing up at the top of the range at the 79% area? This is where you need to try and get in, because if the volatility kicks in once more and you're not in, you end up missing out. So now we're looking for the opportunity for a rally. Now we've got the job figures tomorrow. It all depends what comes out. We may see the opportunity for, you know, a rally back up. It would be awesome if we could, you know, get some kind of movement back up to 64. That would be a nice area to look for failure. Just depends where the price will give it. Okay, you may have already missed the boat on this current move down. I mean, tomorrow, if we get some form of rally failing at the central pivot point, look in that area at the moment, though, you know, you're getting towards the low of the day at the moment. And of course, we could bounce at 63 here. So this is not where you want to sell. Look at this daily resistance area now, or, you know, the 64 level would be ideal. All right, here again. All right, so I discussed this double top, minor double top. Overall, the longer term trend is up in this euro yen at the moment, unless we're completely failing. And I did discuss in the Telegram this week, trading down from 147, which did actually work out quite nicely. So we're heading down to a very strong level of support at the moment. Can that level hold? So let's just have a look at the monthly at the moment. We are most definitely at a very significant area of resistance up here, 145.68, that we're moving back below. You know, there's always the potential that we are topping out here for the long term. You know, we've moved back up to the top of the range. As I said on Tuesday, if this was a 4-hour chart, wouldn't you start to think maybe this is where you could be seeing a failure at the top of the range to move down? You know, it is a monthly chart, but everything's the same across all time frames in terms of price action. So, you know, this could be a long-term top coming in. We need some more data, quite obviously. This area of support here, 144, sorry, it's 144.26. You know, if that level doesn't hold, we could be moving down to the next major level of support. There's a top here, but I'd probably be more inclined to use this one as then a longer term goal for a movement down. Right, this is a bit more of a significant top to that one. So if we can't hold at 144.26, there's this area here on the weekly. So weekly structure's up. So we put a leg up, we corrected, we put another leg up. So now I'd be measuring that leg with the fib. 62 levels down at 141.54, 139.68 to 79. All right. So the key level, as we move down to the day chart at the moment, to watch and see what price wants to do around the area is this area of monthly supports. You've got day support, monthly support 144.26, day support at 144.03, and more day support at 143.68. If we can't hold in here, we may well be moving all the way down the range. The euro dollar is heavily selling off, and this could follow suit in line with the euro dollar. All right, so that day trend is now down. Watch the 144.26 level. If you're already short, you know, that's the level that you want to break. If you're not short, you probably missed the boat in the most immediate move. The question will now be, what does price do here? This could be an area to watch to go long on a setup, whatever is your setup. All right. But if we continue to get weakness on the euro dollar and the pound dollar, like we're having significant weakness at the moment, then we may well see that this, you know, pair move through that level. So, but that is a level where it should be support in the first test, but you know, if it doesn't hold, then you're going to be watching this area to be resistance. Okay, so this is the critical area to watch over the next week. I don't think there's anything to do at the moment. You know, it's just going down the chart gradually. If you want to be a seller until we get to that level, in an ideal world, 145.68 is a broken monthly level of support, which is a good 100 pips away. That would be a great area to watch for resistance to trade down from. I don't know whether we can get a 100 pip rally. So, you know, I like to trade down from resistance. That is the major level at the moment that we've moved through over the last 24 hours. That would be the level I would watch for resistance on a rally, if we can get a rally. But this is just eking its way down the chart at the moment. You need to have gotten in a couple of days ago when we fared up here at 147. That was the best area to start to get in for the move down. Now the euro dollar, I don't want to be a broken record, but 99.52. Did anybody sell at 99.52 yesterday or the day before? I did, but did anybody? All right, so I've got my fib drawn across not last month's range, but it's September's range, because last month we had an inside month. So we failed at the 79% level at daily resistance. I'm anticipating, just want to double check where the monthly low is. 96.31. That's that low down here, I'm guessing, 96.32 here. That's last month's low. I'm anticipating that we will come down and challenge that low this month. We could be just breaking last month's low to then trade down to try and challenge September's low. All right. How do we get in? Well, should have been looking at 99.52. That was the area to look for. We actually spiked back up there this morning. Then it started to hold, you know, once it started to trade back below there, that was really the level to start to look to, you know, click the sell, 100 pip stop. Camry said limit orders are up early. Well, it's difficult to put a limit order there because it could just blow straight through there. So you really need to see what price is doing. So you either have to set your alarm to get up and just watch what's going, or you're going to miss out. But I mean, you could have already been in at 99.52. I was already in when this came up here with a 100 pip stop. So I was either going to be, you know, I could got blown out of the water, or it was going to work out okay for me. So I was watching it at 4 o'clock. I just set my alarm at 4 o'clock, picked my phone up to see what's going on. And for a while, you know, I was thinking, oh, this doesn't look that great, because it started to trade above. Went up to 99.74, so it went about 24 pips against me. But then, of course, it swung back the other way. And now I'm just holding my position. So where can you get in? I wouldn't be getting in where we are right now because it's too low. All right, you need some logical area of resistance to trade back to. 98.76. I don't even know if we can get to 98.76 as a rally, but that's resistance. Now broken support becomes resistance. Can we rally back up to that level? Other than that, what I'll be looking at is, depending on where we finish today, 9800 could become resistance on a rally back to it, or tomorrow the central pivot point, wherever that forms. You can see today, in a very negative market, often the high of the day comes in the central pivot point, and if it's really negative, we can't even get to the central pivot point. So there is the central pivot point. We can't get anywhere near it. All right, and we probably won't get there today. So depending on where we finish today, look at tomorrow's central pivot point to be resistance. We'll look at 98 to be resistance if we're closing below that level. We're clearly below it at the moment. All right, so when we have these very negative days, it's very difficult to get in if it won't rally. And I don't like, you know, if you want, of course, you can sell at the bottom of the day in the hope that it's going to move further down for you. But I don't like to sell at the bottom of the days, because I don't want to get caught at the bottom and then this thing rallies up, you know, 50, 60 pips against me. So I look for logical rally points. We do have, you know, last week's low we've broken below, and the figure here. All right, we may well start to be resistance there. You can watch what price does if it does come back up the chart to that area today, tomorrow. Pound yen. It was very high up here. And with the pound sell-off at the moment, day chart trends turned down. Now the weekly trend is up and the monthly trend is up, but this is not holding this monthly top here. This is a monthly top through here. So the monthly trend is up. Now, is the trend going to, hold its form? Are we going to have another collapse of the pound dollar, which is going to make the pound yen collapse? Let me just move to my day chart. That is the range. To look at, that's last month's low up to that current high. Watch the 62 level. If that does line up pretty much with day support, 79% level. This looks rather negative at the moment. Next level of support to watch is this weekly top here. And we've broken the support low there on the day chart. Day trend is turning down. For me, the most logical level to watch and whether or not price will actually give you a rally is this, if this is now in sell mode to come down to the 62 level or the 79 level here, this monthly top here that we have now moved back below, and you've got day chart resistance there now, very close to that monthly top. So that level there is at 168.65. $168.65 too. So we've got the daily support level that got broken, and we have the monthly level just there. For me, that would be, a level to watch, to expect resistance to come in for a further move down if we can get back up to that level. Don't know whether we can get back up to that level. We just have to watch what price does. So that's this area here. So I've been watching the monthly top now at 168.72 and that old support low at 68.65. That's that area there. Don't know whether we can get there, but that would be a very logical, strong level of resistance to try to trade down from. However, we might not be able to rally. Cameron, you're saying, what about the little inside candle in the 4-hour? You still want to see these also at key levels, or can they be in between? They can be at key level or in between the inside candle. So the inside candle can just be a continuation of the trend, or yes, it can happen at support or resistance. All right. All right, so that's my logical level where I'd like to see price rally back up to be a seller, but won't give me that. So as we move into tomorrow, I always like to look at, if we're in a strong downtrend, can price simply fail at central pivot point to trade down? Now, with the pound yen, it's very difficult in terms of its ranges. Today, it's kind of moved down the best part of 200 pips. Now, I don't know where price will be tomorrow, but go to your day chart first of all. And the logical levels, this is a weekly top that we moved below. We've got this weekly support here at 166.33. I don't know where we'll be after the interest rate decision. And I wouldn't be looking to trade the pound crosses till after the interest rate decision. But tomorrow, have these levels in. If we've broken below a level, then when you're looking on your 50-minute chart, does the central pivot point line up very closely to a broken level of support? If it does, that would be an area that would be looking, can price rally back to that level and hold today for the next day down tomorrow. Okay. All right. Very much this is in sell mode at the moment. Is it going to be in sell mode just to move down to maybe the 62 level or the 79 level of that monthly range? Well, we'll have to watch what price does. and how strong it starts to break down from the top up there. Okay, so that's what I'm looking at there on pound yen. Pound dollar. Now this is September's range. We had an inside month last month. That was the high of the month here. Failed at this day resistance, 116.09. And we're moving back below the resistance levels that we were using last month. All right. So what was resistance last month? We've moved above for maybe a week, but now we've moved back below those levels. So once again, they should be looked as resistance. So today we're moving back below 113.50. Wasn't able to act as any long-term support. All right. So over the next week, we might get a rally. Rally back to 113.50 or 114.09. That's broken monthly support. Broken monthly support is this major low here. So we have managed for a week approximately to move above that level, but we're back below it. So look for it to be resistance. So the two levels I'm watching primarily at the moment is 113.50 and 114.09 to be resistance on a rally back to. And, you know, we could well at the moment just be trading straight down to this day chart level of support here at 110.60 before it even breathes, because at the moment it's just going one direction. Believe me, yes, so the range of September is still applicable because that's the range that we're trading in. It looks like we've failed and moved back below the 79% level. And I don't know what's going to happen over the course of the month, but, you know, I don't know, can we come down to the low of September? Time will tell. But this is getting very negative at the moment. When we start to get down to lower time frames, it's very negative today after yesterday's very negative day. So look at 113.50, 114.09 as your resistance levels to try and trade down from if we can get a rally. All right, very negative on the 4 hour at the moment. Now from a 4 hour, just a simple 4 hour trade entry, Cameron, I know you're looking at that technique. There was one there. It's just a break of that blue candle. All right, price was coming back up to test the monthly resistance. He did get above it a little bit. There was your 4 hour entry to get in. So there was an opportunity to trade the pound dollar down today on that 4 hour entry. Okay, too late now. It's just trading below last week's low. Now, all I would be looking for at the moment is the 4 hour chart. And if I'm actually using my major highs and lows, that's my major high on the 4 hour to that low. The 62, you know, this may still move down for the day, so I can drag my fib down if it keeps moving down. But that's how I draw it at the moment. And, you know, I could be looking up to the 62, 79% levels for retracement. I don't know if we can get up to those levels though, because this is rather negative at the moment. But I will be looking for a rally on the 4 hour chart. Logical 62, 79% rally to try and sell for the next decline. All right. Cameron, you're asking me again. So the 4 hour entry is the break of the previous candle. Okay. You don't have to wait for the candle to close. It's the break of the previous candle. Right. I did talk about a close of a candle yesterday, but that was just because it was closing below a level of support resistance. Okay, so in general terms, the 4 hour entry is you look at the candle closing and you ask yourself, would it be a good entry for me to trade the break of the candle low? In this example, yes, because if you break the candle low, you would be finding resistance at 114.09. So you just set your order up for the break of the candle low, and you're in if it breaks, okay? And still reading more what you're telling me about the 4 hour candle strategy. And these both have what looks like a small inside candle forming two. Well, that's not an inside candle because it went up the day, it went up that 4-hour candle there. It's not an inside candle because it was up from the one before. The new blue one, oh, well, I don't know if it's an inside candle because it can't be inside because it's had a candle down. So it can't be inside because it's made a fresh low, but it's too early to tell at the moment. You have to wait and see, 11 o'clock we may have closed up, but that wouldn't be an inside candle because it's lower than the previous one. It has to be inside the one that formed before, okay? All right, so looking for some form of rally. I will just be seeing if it could rally back to 113.50, 114.09. This is last week's low. If we continue to sell off today, then a rally point back to last week's low would be a level to watch tomorrow. So once we have broken clearly last week's low will often be then resistance for intraday for a decline. So watch last week's low. Last week's low, if you don't have my charts, is at 112.57. All right, at the moment intraday, you can see we haven't been able to get up to central pivot points. Now there is every chance that we could get a rally back up here when we get the interest rate decision. All right, you can be watching 113.50, 114.09, 11400. I think if we get a reaction from the interest rate decision today, it'll probably come up higher. Like this area here, 11400, 114.09. All right. Just as a side note, if you were watching price action as the FOMC statement came out, and as volatile as it was up here, all right, some of the lessons I've been giving in the webinars on this, there was a price imbalance here. We really came up here to fill this imbalance. All right, once it filled that imbalance, it started to stop and just wanted to reverse. All right, so you'll see this all the time, especially at news events. Price will like spike up, it'll fill an imbalance over here, then it'll start to hold. So see the candles, see where the closes are of those candles. All right, it's pretty much, there's the top of that imbalance. So look where those candles were, topping out at. Pretty much where the imbalance started. I know it spiked through here, but if you had that process in your mind of filling the imbalance, we're starting to stall at the top of the imbalance, that would be going through my mind there. And then making a decision, do I want to trade at that level? Okay. And if you want to make a note of that, in news volatility where we run up or we run down, price will often come up to fill an imbalance that hasn't been filled yet from 1 or 2 days ago on the 15-minute chart. All right, and then it starts to hold, and then lo and behold, because what happens here is we fill this imbalance, okay, but to fill that imbalance, we create this imbalance. All right. See that candle? See how it comes down on that one candle to almost fill the imbalance and then comes back up to these highs here. Holds at this resistance area here, then to turn down. All right, so that imbalance gets filled. This imbalance gets filled. There's a rally there on a 5-minute chart. Let's just break it down to a 5-minute chart so you can see what happens through the news. So this comes down to fill that imbalance. But what that does on the 5-minute chart, it actually creates an imbalance here. On the 5-minute chart, we come up to try to fill that imbalance before then moving back down this way. All right, so for those that are fully across imbalances. Hopefully that's making, you know, some sense to you, and you might be able to see that around about the news times and make some logical decisions around what is actually happening when it's very volatile. All right. So just spend some time in the very volatile periods on the 50-minute chart around the very volatile news items. Has it run up to fill an imbalance? Because if it has, it'll probably then run back down to fill an imbalance it just created. All right. So at the moment, you know, I would not be looking to sell the low of the day here at the moment. It's way too far down. You have to try to look to sell a rally. Long term, I'm expecting further declines, looking for an opportunity to sell a rally, okay? It would be a great Christmas present if you can sell up here somewhere and we move down here by the end of the month or by sometime in December. If we can get back down here, can we get back down? No, I keep getting asked, are we going to parity? Wouldn't it be great if we get to parity by Christmas and you've sold it up there? All right. I was fortunate. I sold it up here at this resistance level up here. I saw this holding these 2-3 days at 1609. I got short at 1605. Okay. So I'm just holding, hoping that this is moving down all the way back down the range. I wasn't in when we dropped down here, which was much to my despair. So I said to myself, if I can get short high up here, I'm going to get short because I don't want to miss out the second time if it does drop down. So I did manage to get short the second time. So let's just see whether it can move down. All right, so watch those levels for a rally. Don't go selling the bottom of the current move. Look for a rally. It doesn't look like it's got much of a rally at the moment, the way the 50-minute candles are forming. New Zealand yen. I did discuss this area. Okay. On Tuesday, I said watch. I put a couple of videos out this week. One on Tuesday saying 86.21. Would we fail? Would we fail in this area of weekly resistance and move back down? So I was looking for a close below. And today I was looking for a retest of 86.21, and it hasn't given that level of a test. And it's just like the pound dollar at the moment, it's just moving down the chart. So hopefully, I think this is now moving down to a weekly support. There's the range. There's the 79% level. I mean, you could have sold at the 79 level with a 100 pip stop. That would have worked out just perfectly. But at the moment, if you're not in, you're looking for a seller rally. I'm looking at this weekly low. Weekly low creates a weekly support area. Are we coming down into this area here? Are we actually going to move below the area to maybe the 127 extension? All right, looks like we failed up here. The 4-hour chart. I was hoping it would come up, but it's not come up yet. It could still get back up to 86.21 for a retest, but at the moment, it's not having any major rally at the moment. So I'd just be drawing a fib across the range. Looking, keep dragging it down if price keeps going down. At the moment, the 62 level lines up with that resistance. But you may need to drag that further down. I mean, it would be great. I was looking at, when price was here, when I was getting on my charts this morning, price was here. I was hoping this would come up to this area, but it hasn't. And it couldn't even get up to 86 today. So, but the news, we have some US news coming out at midnight. We may see some profit taking ahead of the job figures. We may, or, the job figures might get this back up to this area here. All right. So if you wanted to trade this and you're not in yet, I'm watching 86.21. All right. Depending on how low this moves, you might need to start to look at 86 as a resistance level to look for your setup to trade down from. All right, but it's another pair. I don't want to be selling at the low of the day. Look to sell a rally. But nothing much is rallying at the moment. Okay. So just back to the 4-hour chart. Just keep dragging the fib down. Look to sell a rally, okay? New Zealand dollar. So the other day, let's go to the day chart. It's actually failed at a level of resistance. I had it on my chart the other day. That is a weekly level from over here, right? It's very important that you're not just looking at price action structure here. Is we broke below that weekly level of support last month. It's now become resistance, and that's from 2020, okay? All right. So that might be the high of the month. I was, hoping it would get up higher to 60.47, but it doesn't look like it wants to do that. And this level here, 58.13, that we're above, quite clearly below now. That's last month's high. I did discuss on Tuesday about, are we going to false break last month's high this month to then trade down for the month? So we've clearly false broke it at the moment. I'm just like the other pairs, I'm just waiting to see if we get a relief rally. This, generally speaking, price doesn't go down, for like 7-10 days in a row, generally speaking, without having a rally. The key level to watch for at the moment, let me just refresh my mind at 58.13. I may have told you a bit of a porky. 58.13 is daily resistance here. But that isn't last month's high. Last month's high, if you got my last month's high indicator, it's this area here. All right, so we false broke. We're kind of fractionally false breaking here. Then the news came out in the morning. Obviously came up to here. Of course, if you're watching this morning and you saw it starting to move back to last month's high, that was a time to trade. Now, I would be watching two levels for rally points at the moment. This level, 58.13. Can we get a rally on the 4-hour chart to that level? My much preferred level, keep dragging the fib down as price moves down, would be to see price revisit last month's high. Got all these resistance to the left. You'd end up, not a textbook, but you would end up potentially with some form of left shoulder here, head, a right shoulder here. Could price rally back up to form that pattern? Okay, so I'm going to be watching it. I don't know whether it can or it can't. It might do that for you in the job figures. If the job figure news is very negative US, we could get back up there. If we don't get, too much US negativity through the next week, whenever we can get a rally, look at 58.13, pretty much the 58 number, okay? But again, same commentary, I'm not going to sell the bottom of the day. All right. Dollar Canadian, I discussed the potential for this double bottom on Tuesday. I discussed the potential then of a 4-hour retracement. This is how I drew it out for you on Tuesday. All right, so it actually got down there, not when we had the FOMC, it got down there in Wednesday. So I don't know if anybody looked at taking that down here on Wednesday. Or it might have been late Tuesday, Wednesday. It wasn't this morning because that's this morning, just here. All right, so that has pulled back into the area that I defined the other day. It's getting a little bit overextended now. And it is once more coming into that very dangerous area that I discussed last month. Slavia asking me, it creates price imbalances as it moves down. Well, back on that euro, back on the pound dollar. Well, it did create an imbalance on the 5-minute chart, which it then came back up to refill. I'll just go back to that pound. This this 1 5-minute candle here as it came down. So on this, the imbalances are showing on this 5-minute. There was a 5-minute imbalance here to the upside as we moved up. Then price came down, didn't quite fill it on this candle. It got filled obviously here. All right. But as this candle came down, it created an imbalance to the downside here. All right. And then this candle here tried to come up to fill that imbalance before this candle comes down and this candle comes down to completely fill this imbalance here. So there was an imbalance to the upside. We did create an imbalance to the downside, which almost got filled on a reaction back up before dropping back down. Okay. Yeah, and there was also an imbalance here. Where price comes back up to fill it pretty much exactly before further moving down. All right. So that's my interpretation of what imbalances were forming there. Okay, hopefully you got that. All right, let's move back to the dollar Canadian. Oh, you're meaning today's move. Let's just go back. Well, on this 15-minute chart, there's a number of imbalances on this 15-minute chart. There's one here. And there's another one. There's another little one in here. There's one in the most recent price action. There's an imbalance here, which I would link down to there. All right, so there's a number of imbalances potentially that could get filled in today's movement. All right, on the 50-minute chart there. Now, whether or not price will come up and fill them, it's very negative to the downside at the moment, but you'll be seeing that price imbalance that I'm showing you there is very much shown, I'm sure, on the 4-hour chart at the moment. All right, don't know where the next candle is going to finish, but currently the imbalance on the 4-hour chart, there's a whole imbalance there at the moment that could get filled on the 4-hour chart. All right, now whether or not we go back and fill it because things are very negative, but yes, there's an imbalance there on the 4-hour and there's some smaller ones on the 15-minute. All right, back to the Canadian. All right, so I showed you this on Tuesday where the best option was to get in. And often when we get these strong trends starting to unfold, there's one best option, and then price then starts to head towards the resistance that it needs to maybe navigate beyond. So yes, at the moment, this was the best area to get in. And now we're heading into all this resistance once more that we struggled with last month. So at the moment, yes, it is potentially, there's a double bottom here forming. We've already missed the boat. If it is a double bottom, you'd be drawing your fib like so. There's your double bottom. Try to get in by the 79% retracement level as it starts to move up. And potentially now we could be moving all the way up to this 200% level here. All right, now where price is right now, we're coming up to challenge weekly resistance, monthly resistance. So it's not in the perfect spot to be getting in. The perfect spot was lower down to get in. And then you're sitting tight to see whether the price can move through these resistance levels. All right. So there could be a double bottom there that's formed. We could be moving up to maybe 144.52. But at the moment where price is now, I don't feel like that's the greatest area to try to get in because price is now starting to want to navigate resistance. So Cameron asking, would you have taken a trade at the 4-hour pullback on the dollar CAD where it hit the weekly resistance at 137.15? Not really a break and retest or reversal though. Well, what we've had is This is my 4 hour. So, you know, there's that daily low you're talking about. I structured it a lot for you on Tuesday. I posed the question, was this a double bottom? I posed the question then, would you see a 79% pullback? Would you see the 79% fib pattern here then? Would we see potentially, I said, you know, this could be a left shoulder head with a right shoulder form here for a move up. Now, I didn't trade that. I don't really trade the dollar Canadian because it's not in my time zone, but this is all perfectly structured out, telling you that maybe this is a double bottom. It moves up to an uptrend here on the 4 hour chart. It pulls back to the 79% level. It holds. This was where you should be looking to trade it if you want to trade the dollar Canadian. It all, I said that ahead of time on Tuesday, and it all just ran out, formed that 79% retracement after maybe the double bottom is forming, gave you that inverted head and shoulder pattern, and now it's on its way. Now, is it going to break that high over here long term? I don't know, but that was all looking, you know, set up for a pullback to trade if you wanted to trade the dollar Canadian. All right. If it was in my time zone, I would have traded it. But the dollar Canadian doesn't work in my time zone, so I don't really trade it. But, you know, I could have set an order up there if I really wanted to, but I was already short pound dollar, euro dollar, so I didn't want to be, you know, I didn't want to be long another dollar pair, you know, the dollar side, in case things went wrong. What do I prefer best for Oz? Aussie dollar, Aussie yen, New Zealand dollar, pound dollar, euro yen. Those are the ones that I generally focus on. So you're saying, apart from the obvious, well, I may have just said the obvious, but I only trade the obvious ones. I don't trade those other kind of outside. I don't even trade the main ones. I don't trade the ones that aren't on my charts in front of you right now. Sometimes I will trade the dollar Canadian if I really want to, but I didn't trade that setup because I was already short the pound dollar and the euro dollar. All right, cover the dollar yen. Just before I do leave the dollar Canadian, mate, if you want to trade this pair, the fact that we've moved above 37.15, which is, where am I getting 37.15 here is weekly resistance. We're above it. That could act as support now. So if you want to trade this pair, you know, we've moved above 137.15. This is my 15-minute chart. 137.15 should be support now for a pullback. All right, we found a little bit of resistance here to pull back intraday. Then we've broken above it. So a pullback, you should look at 137.15, maybe down to 137.100 to be support for the continued run up now from, you know, the day chart look. Day chart look, this double bottom. Is that now a true double bottom for a much higher move up? Just in that awful area of resistance at the moment. But, you know, you could try to look for a pullback to the 137.100 to 137.15 area for support now. All right, final one to go through, gold. If you've been following my analysis on gold, we know it's 1676. That's the key level. Monthly broken support. This month, we cannot get to it. All right, weekly chart showing you lower top. We're probably going to move down here and break these bottoms potentially to keep the trend in play. Still rather consolidatory here, but clearly try to put in a bit of a higher bottom here and then it rejected up here to trade down. I think the other day, I had a fib drawn across there from memory. I discussed this 79% level and these highs. Slav, I you trade gold, so I'm pretty sure I kind of discussed that area. I don't know whether you traded up there, but I was saying, I think I said there was highs here. I would be looking at this. I would be looking at the area of the 79% fib up to the resistance level. All right, and the FOMC statement obviously pushed it up there. I don't know whether anybody traded gold as it started to reverse down, but of course, we can't go back in time. That was the area to look for, all this 4-hour resistance. So now what I would be looking at is looking at the 4-hour downtrend and waiting for a rally within that downtrend. Okay, keep dragging your fib down, monitor the 62.79 levels for a rally back up to sell to keep trading down. All right, clearly we don't want to get back to 1676, which is broken monthly support now being resistance. We couldn't get there this week. So it looks like now that area is kind of, the market's waving goodbye to that area, and maybe we're just going to be starting to see a continued downtrend on gold at the moment. From the longer term positional play, I've been saying that we may be having a very major double top on the monthly chart here for a move down to 1300 area down here. That's the double top price projection. That comes in, the exact number is 1278, so I'm just calling it 113, or calling it, sorry, the 1300 level. It looks like, you know, we've tested the 1676 level a number of times, and this month we can't quite test it. It's looking like a bit of a failure there now for a movement down. Now, there is support here. So if you are engaging on this, be careful of 1557. That's support. $15.57.05 is your monthly support as we're moving down. All right. And Slav, you said you sold it there from 1659 to 1641. All right, so somewhere in this area here, you sold it at the end of October. Okay, well, are you still in? All right. All right, but at the moment, that's the structure we're seeing. We've had that rally. We may be coming down to complete at the 127 extension. And sorry, that would be from that high there. So we may be coming into the 127 extension, which is last month's low. So we may see a bit of support come in there. And then, you know, draw your fib from that high down to wherever we bottom, and then monitor the rally to look to sell a rally. All right, you're telling me, Annie, you sold at 1663, you got out at 1640. Okay, well, that's a profit. Well done. All right, so very volatile. Maybe now we've waved goodbye to, you know, to this high area here, and you have to look for a lower rally area now to look to sell gold. Okay, unless, you know, something changes from the US, maybe we get poor job figures. But if we get good news from the job figures on Friday, and then pairs to the US dollar are going to go down, and this is obviously going to continue moving down. So look to sell a rally. So unfortunately, at the moment, if you weren't already short on a lot of pairs at the moment we're at the lows of the days. So monitoring to look for a rally to sell. Aussie yen's obviously moving down. Aussie dollars breaking clearly below 63. Euro yen still generally going down. Euro dollar, you know, nothing's wanting to have a rally at the moment. You know, hopefully we get a bit of US dollar negativity and we can get a rally. Annie, you want to look at dollar franc? coming up to a lot of resistance. It's at resistance right now, but 101 101.28. All right, so the monthly trend is up, but you've clearly got this band of resistance to the left here that the pair is trading into. So that's not a great area to trade at the moment. All right. I mean, the dollar franc, its nature is it's rather range bound because the Central Bank of Switzerland tends to intervene. So it is at monthly resistance up there. Weekly trend is up. Your daily look, you can see it's at resistance right now. Now, this isn't where I want to be trading. It'd be great, you know, if you're along the dollar franc, this would be a great area to take profits. All right. And the 4 hour, you know, it's really the inverse look in terms of where price is in its day to the euro dollar. It's at the top of its day, and you're at monthly resistance. So, you know, it could falter here. It's always a difficult one to trade the dollar franc when it's at its resistance in an uptrend because often there can be intervention. So at the moment, you know, let me just go back to the monthly chart. If we're going to see a clear dominant US dollar, then we're probably going to move, potentially we could move above these levels, okay? But then, you know, there was a very strong intervention here from the Swiss bank. We could see some intervention. All right, so you always have to be aware of the dollar franc. When you're up to these levels where the central bank's watching, there can always be intervention. It's not the area where you want to be a buyer, is it? I don't know where you want to be a seller either because of the US dollar strength. So it's a difficult one. I mean, if you start to see a clear sell-off from that level, then, you know, look for your setup to sell. But it's a very difficult one. We're at the clear area where the central bank tends to watch. But we have a very dominant US dollar at the moment. So would the central bank start to be thinking it's just a waste of money to try to defend that level at the moment? We might want to wait for it to go up a little bit higher before we defend. Of course, there's always the flip side of things. As we're talking about the US dollar, I'm going to have to go. But the dollar index, this monthly look here, we could still top out up here and trade down through the course of the month. You know, we're obviously very buoyant from the FOMC statement yesterday. That doesn't mean to say it's going to continue for the next 2 weeks. Things could, you know, come up to challenge last month's high, hold, and turn back around. If that happens, then on the Swiss franc here, you know, clearly, I'll move it down to the day chart, clearly then we could see a sell-off. So you're going to have to, you know, if you want to maybe look at trading down from that clear resistance area, you're going to have to watch what the dollar index is doing as a general thing. If that is starting to sell off once more, then clearly, yes, up there could be a great area to look for a short. But the current 24 hours is definitely saying US dollar strength, US dollar strength. Will we be seeing that after the job figures? You know, the job figures might give us a totally different story. And then we're seeing a reversal. So if you like the dollar franc, watch the job figures. Does it give you, you know, US dollar weakness? Then you might see a setup to trade down. Okay. All right, everybody. Just a heads up about what's coming next week. More analysis next Tuesday, 8 p.m. New South Wales time. Next Wednesday, I'm going to go through trading plans, trading journaling, forward testing, your strategy, okay? So that's next Wednesday. Slavia asking me if the budget decides to intervene again, it might weaken the dollar and make markets rally. Well, it could. Fractionally. But if the US dollar is strong, then the budge might, you know, push it down 500 pips and then it'll probably just bounce all the way back up again like it's been doing. But yeah, it could for a day create a bit of US dollar weakness. I don't know, you know, we're looking very weak on some of these pairs. I'm just looking at my screen and my other screen here. Pound's down at 112.42 at the moment. It's at the low of the day. It just keeps moving down the chart. So we'll have to wait and see, won't we, what the bodge brings and how that affects the US dollar. All right, everybody, thanks very much. Of course, we're at the lows of the days at the moment. Look for a rally. Might have to wait a couple of days, but look for the most opportune time to sell, which is obviously at the top of a rally somewhere. And hopefully the trends prevail to the downside. Okay. Thanks, everybody.